Good afternoon and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today. Okay, so the first question is, how long should a trading session be? Okay, so we're gonna copy the question and we will paste it in our notepad just like that. We're gonna click here to fold it down. And this is, as I always explain, this is the web trader. To access the web trader, we don't have to download or install anything. We just need to log in into the with our email and password into avatrade.com. Okay, so that should probably look like this. Otherwise, you've got those tiny arrows to the upper right, which allows us to minimize and maximize the chart, so it will be more comfortable. And let's see what this question is about. So how long should it be? All right, so in order for us to actually answer this question, I think we're going to use some range. We're going to have a typical range of how long it could take. So let's say between 5 minutes to 10 minutes. B will be let's say 10 minutes to 30 minutes. And then we're going to have C as in our, let's say 30 minutes to even an hour. And then we're going to go oh, let me add the minutes, maybe to 1 hour. Okay, let's say 30 to 60 minutes. This way will be more understandable. And then 60 minutes to, let's say, plus. Okay, 60 minutes plus. So who thinks that it should be A or B or C or D? Tell me your opinion, guys. Sunil, you choosing C. Okay, Sunil, you care to explain why C, why 30 to 60 minutes specifically? In the meantime, we will understand the differences, and we will probably understand the structure of how a trading session can be made to include analysis and risk. Exactly. Good job, Sunil. So just like Sunil replied, what we typically want to have in our trading session is a certain, it's not obligatory in any way, but we want to have a certain order to what we're going to do. So the first thing we would like to do is just a little bit of research, right? What do I mean by that? As you can see, there are different categories in here. There are different instruments in here, and they all move differently, right? They all have different value, the changes according to different parameters. They all have a different price. They all have a different lot size. So if, for instance, we're going to click here on the what should we take? Cryptos as an example, just a random thing here, maybe a Bitcoin or even one of the smaller currencies, maybe even Ethereum. Yeah. So even if we click on Ethereum, just as an example, we'll click here. Let's go with a sell. Oh, we've got some nice things on it already. Okay, but we're gonna clean what we've got so we can begin from scratch. Okay, and let's use Ethereum. As we can see, Ethereum is quite bearish. We can have a downtrend line here to help us understand the proportions and in terms of the momentum where we are. So just a second. So if we just another one here, yeah. If we see this picture here, okay, and what I did is nothing crazy. I just placed 1, 2, 3, 4 lines, and we've got the current price, which is somewhere between this line to that line. As we can see, those are relatively the proportions. Is the higher line here is the resistance. Let's see if we can leave a note here. So, and the bottom lines will be our support, right? So we've got, let's see if we can, all right. Now our just hold on. Okay, next line, we've already passed that, and we should probably point out that point. Okay, so the current, there we are. This is the last support, which we already broke. Okay, now to answer the question, how long a session, how long a trading session can be, I need to include what needs to be done in the session. If my session, for instance, today on Thursday, what I'm doing is only analysis, so I don't really need 60 minutes. I don't really need an hour or maybe even up to 2 hours, you know, plus. I don't necessarily need that. Maybe I need A or B or C, maybe a few minutes, you know, 10 or 30 minutes, okay. But if I want to have the whole process and I'm not getting lazy, but I'm doing the whole process, so the first thing I would like to do is a research. Which instruments, let's write it down, which instruments are worth my attention, okay? Second thing that I'm gonna do is I'm gonna do basic analysis, right? After basic analysis, which is what we've got in here, after basic analysis, we're gonna do position composition, which I will explain what it means. This means design the position according to our trading plan. Trading plan. And once we've done that, we're gonna add what we're gonna add. Who knows? Who knows? Who would like to help me here? What's the next thing? We did the research. We want to know what instruments worth our attention. We've got this basic analysis here, nothing too crazy. And then we've got the position composition, which is the design the position according to our plan. So we're placing the numbers. We're placing, let's suppose that our target can be $1,000. Let's suppose that the current 4,000 seems like a proper entry. So we're going to bound it via execute when price hits. And let's say our take profit could be, let's apply an ATR. So we will have some idea in terms of the averages. This indicator I'm using today is average true range. It allows me to select how many candles I'm going to withdraw my average from. And since we're looking at days and it's marked here 14, which I can increase or decrease, but let's keep it for 2 weeks and then change the color to yellow. And now we know that the average typical movement per day for Ethereum is $170. So since I'm aiming a little higher, I think $250 is definitely achievable for Ethereum to move per in 2 to 3 days. Let's put it this way. So I'm gonna stay with my sell, and my take profit needs to be $250 lower than the entry, which will be 3,550. The other way around, it's going to be 2,250, which will represent our stop loss. And now with this in mind, let's suppose that my target is 1,000, not 250. So I will just increase it by 3, sorry. And then I've got the position ready. So the next thing I would like to write down is obviously risk, money management. Okay. And then we've got the last thing, we've got the margin comparison. And then we've got prioritization. And then we've got, lastly, we've got execution. Okay, now let's speak about those steps. Unfortunately, this process is quite I wouldn't say it's primitive, but it's the full process to my eyes. It could even be extended. But if for instance I'm only doing one of those things, okay? On Monday I do this. So Monday, on Wednesday I do this, and on Thursday, which is today, I am doing all of the rest, as an example, or only, let's say in here. Okay, so in here we'll do, usually, no, it doesn't make sense. It needs to happen on the same day. So I'll explain a little bit about the differences. And then in here will be Friday. Again, this is just a random it doesn't have to, I can have everything on the same time. This is, by the way, when I do what I do when I trade. I don't just do it apart, because I think it's difficult to remember the analysis. Even though it's still on the screen, it's difficult to remember the analysis that I had on Monday and then to carry on from the same point. So I like to do the whole process. And in my own personal session, I take approximately 1 hour for a session. This is what I spend most of my time. Okay, I spend approximately 20 minutes just for the research. The analysis maybe another 10 or 20 minutes, and with the remaining 20 minutes, this doesn't take too long, since I always work with the same plan, so I don't have to reinvent myself. It's almost always the same proportions. Risk money management, risk reward ratio. Okay, what does that mean? What does that mean? It means that now I can gain or lose the same amount, right? So for instance, if I open another 4 positions with this same ratio, my possible profit and possible loss remains the same. But if I minimize this to a ratio of 1 to half, is an example. So now for every position that I use with this ratio, for every profitable position, I make 1,000. And for every losing position, I only lose half. This way, if half of my position made profits and half had losses, I'm still going to keep moving forward. So this is regarding the risk-reward ratio. The following step is margin comparison, which is what we've got in here. As you can see, even though this position might seem like it's well composed, I'm actually, in order to open this position, I'm about to use 80% of my available margin. So this is also something that we need to remember. Our balance, our margin needs to do several things. One, we need to have it available to open the position. Two, if the market fluctuates against us, we need the available margin to sustain our position. Because once our margin level drops below the margin level requirement, the platform will close the position. We cannot hold a position limitless even if we don't have the margin. So we need to remember. Another thing that we could do, by the way, for instance, if I take this position and I don't have enough margin to hold it, so my margin level drops below the margin level requirement, I can do one of several things. One of the things that I can do to free up margin is I can add new margin to my account, or I can free up the margin from other positions. Okay, we're not explaining about that too thoroughly now. That's not the purpose of the question. The purpose of the question is, how long should the trading session be? And this is why I choose to break it down for you to those necessary steps. Now, of course, each of those things require a different time frame, which you guys can decide, and that depends on your availability during the week. If you are self-employed, if you run a business, if you are busy in terms of having kids or not having kids, everyone knows their available time. So what I suggest is choose what kind of steps you're going to take in your trading session. Also choose how long you're going to spend in every step. Like I said, I'm spending a lot of time here. Some of my some clients don't even do that, right? They already know what they are trading. They're not choosing new assets instruments all the time. For instance, if I only trade gold or something specific, I don't need to do that, right? Allegedly, I would still need. Never mind. Okay, so for now, and the last thing here, the best instrument with lower margin cost and the best analysis. This is probably what I will take. And my best has a different definition, so of course everyone can have their own. All right, and execution, we don't need to explain. Execution means that we open the position and that's it. The next stage is this, just to monitor what we've done. There is nothing necessary that we need to do, only adjustments if we would want. So we're going to take our options. We're going to also write here the answer. I can choose to divide the trading session to various time span depending on how long I wish to spend on each step, and basically how well my plan is, because if I don't have any plan, this will take very, very long every time. If I do have a plan, so to go through those things will be almost as going through a checklist, right? So I don't need to reinvent myself. So I'm also going to add here, if I have a plan and I'm using it consistently, this can make the process easier and much more efficient. Like I said, if I'm baking a cake and I'm always using the same recipe, so my cake will almost look and taste the same. If I just go into the kitchen and think, what am I going to make today and how am I going to make it? So obviously my cakes will not taste the same all the time and might not look the same all the time. Of course, I hope you guys understand. I'm not telling you this story about cakes, for the, I guess you understand the metaphor here, right? So with a good plan and consistent plan, it's just more efficient to have consistency. And fortunately, I don't think we can place all of this in our presentation. So what we're going to do is we will, just a second. I really hope that what I'm trying to do here will work out, because the odds that we will place it in the presentation is very, very small, but we're still going to try. Yeah, no, didn't think so. Just a second. Okay. Maybe if it's a bit smaller. There we go. Now, what is the next question? So the next question is, how can I select the best instrument to trade? I just love this kind of questions. Of course, there is no best. There is no best instrument to trade. There is no ultimate whatever you want to call it. Everyone has their own best, and I'll explain the same way that I've explained in the beginning. But let's take another instrument, and instead of crude oil, you know what? Let's take crude oil instead of Ethereum. So I'm going to go to commodities, then go to energies, then select crude oil. And with crude oil selected, we're going to click here, and then we click here on the arrows to expand it, click and drag it down, click buy or sell to open the sidebar. We've already have the ATR applied, it's great. And the next step is how to select. So to my opinion, there is no specific best instrument. We can choose what instrument to trade according to different parameters. One, fluctuations. Price, or maybe I should call it value, right? So the value and we've got here the okay. All right. So what I'm trying to tell you guys with those things is, if I'll go back to the list, right? Let's just go back to the list. If there was a specific instrument here that I could tell you, listen, the CAD, Japanese yen, if you trade it, is the best. So what exactly do I mean by is the best? So I wrote here a few parameters. Fluctuations is one thing. Let's make a quick comparison, see how we can prioritize one instrument over another. So I'm gonna go back to crude oil, what we had. Let's compare oil with gold. So we've got crude oil on one side, we're gonna have gold on the other side. Then we're gonna click buy or sell. We're gonna also add here the average true range, keep it on 14, maybe switch to yellow, and yeah. Now, we've got the ATR for gold. Oh, we are on 1 minute, so let's change it to days. Also, we are on days. Yeah, that makes sense. This also makes sense. Okay. Now, let's go to 0.01. In here, we can click. We are already on 0.01. And in here, great. Now, let's make a quick comparison and see what can be the difference between those two instruments in terms of prioritizing what to trade. Because again, to my opinion, there is no best, or we can say the other way around. Everything is the best to trade. Everything, because we can make money with oil or with gold. But still, let's try to see what the differences are. So we're going to click here on buy with gold, and we're going to change the lot size. Actually, let's change it 0.1, and then we're going to click on the take profit, the stop loss, execute when price hits. Let's have it like this. Take profit can be $100 higher. It's not going to be any surprise. And same for $100 lower. Okay, so now we can make $1,000 if gold goes $100 higher, and if it Okay, if it goes down $100, we can lose potentially 1,000. Okay, if we don't want to click and drag, we can just change it from the coordinates, right? So we're going to make it green. The other one we're going to make red. So this will be $100 lower, right? And now we've got the take profit and the stop loss represented by those green and red lines. Next up, we're also going to write down those things. So we've got here a position with gold. Entry, as we said, is 3,750. Take profit, we said 3,850. And stop loss, 3,650. This can lead us to make or lose 1,000. And our lot size in here, as we said, is 0.1, which stands for 10 units. Now, if we compare, just a second, and the margin impact, okay. If we compare this position with crude oil, and with crude oil, let's click here on crude oil, click here buy. Okay, same idea. Also, we're gonna maybe place 0.1, and then we will click here on execute when price hits, bound it to 64 to yeah, let's keep it like this, and then 75. Okay, let's see where that is. Okay, so it's been quite a while since it's been there. I think what could be more realistic, staying for maybe $5 movement. So we're gonna go for 70 instead. So we're gonna go for 70, and then we will increase that a little bit. And this seems completely fine. The only thing is, though, this needs to be, I changed it. There we go. Oh, still doesn't let us do it. Oh, there we go. And we will look at the other way around. Nice. So now let's write down the specs for this position as well. So we've got here the first position, oil. The first position with the gold, 0.1, which is 10 units. Entry is 3,750. Take profit 3,850. Stop loss 3,650. We can make or lose 1,000 with the cost. The margin impact, we didn't write it down. Okay, we'll check it in a moment. But for crude oil, entry is 65. Then take profit 70. Stop loss 60. This can all also lead us to what? To $1,000. 0.2, 200. Okay, margin impact. And now let's compare it with the margin impact for gold. So if we click here on buy and we do this, we see that the margin impact is almost 30%, from oil, where we can get the same $1,000. So how we can check? We're going to take 8,350, which is the bigger number, and then we will take 1,294 and divide it by 1,875, and then we'll multiply by 100, and we can see that this is 30% more on gold. As we can see, it's 30% more than the position cost, the margin impact cost for crude oil. Okay, this might not seem significant, but again, the difference, if this is the only position that I take on my account, I should be fine. Again, we are with 10,000. This is a demo account. It has 10,000, but if I'm limited, if this is not the case, then every dollar make a difference. And this is the exercise that I'm showing you now. This can also make significant difference. So one of the things that we're checking is fluctuations. We can see that oil is moving $1, gold is moving $36. But we should remember that everything is relatively to its own fluctuations. Of course, typical movement for crude oil, this $1 here, it might be a significant movement. If we point in here on see, in this case, the ATR was 2.9 when it dropped significantly. See this red line here? Okay, this was on June. In this case, you see $3 compared to gold is nothing, but for oil is a lot. It's a lot. Okay, in this case as well, it's double than what we have today. Now for gold, you might think, oh, $36. That's you know, it's quite a lot. But if you point on another candles, you will discover that it's more than the previous, but it's not crazy high. There is a difference of up to $2, $3, $4, but it's still considered typical movement. Let's try and change it to weeks. See, so in weeks, 120. You see, in weeks is much difference. You see, the average true range that we're looking for. Just look in here, right? Current week is 108. I would say it's not that strong. Again, 108, 108, 110, 112, 18. Okay, in here is more. Here, this is $10 more, $20 more. You see, so there are cases where, see, it's such a big candle, but again, it's smaller than what we have today. So yeah, also remember that with this indicator, the average true range, we can also select what range of candles we would like to withdraw the average from. So if I'm using weeks, I'm not sure that going back 14 weeks backward, it's 3 months, more than 3 months. So maybe I'll change it to 5 or 6. And now it makes much more sense. Okay, as you can see, in this case, it changes quite significantly, 167 at some point. All right. But I think we've concluded the first one, the fluctuations. The second thing that we spoke about is the value. The value is the margin impact, which we've made a comparison here. And okay, and the last thing that I wrote here is analysis comfortability, and this is, to my opinion, the most important thing, and I'll explain to you why. For me, it's not going to make a lot of a difference if I'm going to make my money with my profits with gold or with oil or with platinum or with wheat. I don't care at all. I don't care at all what to trade, as long as I feel secure with the analysis. Okay, so I've opened coffee. You can see I don't really care what I make my profits with, as long as the analysis makes sense and as long as the fundamentals make sense. So I'm going to make this comparison with the margin impact and with the fluctuations, but at the end of the day, what I want to know is if I can analyze, if it makes sense or not. For instance, if I'll take something a bit more Okay, that still doesn't give us quite what we want. There we go. So, for instance, we're looking at platinum here. We're going to click on buy, and let's change to weeks. Okay, I mean, we really don't need to be trading geniuses to know what's going on here. We don't, right? If I'll have to simplify what's going on here, it's very simple. There is a value change of 50%, insane, just insane. Just a second. So this is where we are, 875. And from 875 to where we are, okay, today, it's almost 50%. It's almost 50%. It did drop. It did drop. Let's see when. Okay, in July, but that's fine. But as you can see, I don't have to be a genius in trading to know what's going on here. So the long-term trend seems bullish. Bullish as in positive, right? So if we see that this was the trend, and we know where the economy is heading, at least we think we know where the economy is heading, but we're getting smaller, we're getting some hints here and there with the interest rate and with the tariffs and all the surroundings. So if I see a chart like this, I might be more encouraged to trade rather than a chart that I don't understand, right? When we have a market that looks like this and not like that, or I should say like that, then I want to analyze something that I can analyze. I don't want to analyze something with uncertainty that will get me tangled. Okay, so as we spoke about three things, the fluctuations, which we can use an ATR or use other sources for that, the value, which is the margin comparison that we've made between gold, the margin impact, and the margin impact for oil. As we can see, we can get the same $1,000 in here with the comparison that we've made. And the last thing that we spoke about, which is analysis comfortability, which to my opinion is the most important, because we can make money with everything. Okay, so I'm actually gonna delete that down so we can choose an instrument to trade according to their parameters. Yeah, I don't think there is much to add because it opens for interpretation and we can have 2 hours discussion only on that. Some may say, they have their own parameters. This is the parameters that I like to work with. Some may say I only trade currencies, or I only trade indices, or I only trade this or that, but those are my parameters. So what is a senior account manager, and how and does it require a subscription? This is a first timer, I believe. The answer is absolutely not. Senior account manager is a privilege that we give to clients. It doesn't require any subscription or any additional pay. It's actually to help make more progress. So a senior account manager is a privilege that is given depending on the eligibility. Depending on the eligibility when making a deposit on the account. It doesn't require any subscription, and doesn't cost anything as an addition. The senior account manager can give full support for the process to matters, to all matters under the trading umbrella, such as let's say questions about analysis, risk money management, trading plan, any platform. And that's, guys, basically it. That's an account manager is there to something here. Management, yeah. Okay. Yeah, so that is basically the answer for that. There is nothing else that I can add. What a mess. Oh, that's what that was the question, right? No? No? Okay. All right. I'm just doing it so the rest of the answer will fit. Otherwise, this will never happen. What about if we take it a little up? Yeah. Okay. Again, the presentation, the recording is in our YouTube channel. If something doesn't make sense, just go to our YouTube channel, see the whole explanation in your own speed, and I'm sure it would make sense. What is auto trading, and is it good as a long-term solution? Well, it might. The thing is that we don't know. With auto trading, what is auto trading, by the way? There are various ways to do auto trading. Okay, so we've got EA. And we've got now I'll explain to you about the differences. Expert Advisor is a software designed so this is one, right? Expert Advisor, which is a software scripted to trade automatically based on certain parameters. And the second thing is link trading account to copy another trading account. How does that work? How? We have an app, it's called Ava Social. What we can do there is we can download the app. We can select from other lists of traders which one we would like to copy. And then by selecting the other trader, we can practically copy his strategy. So for instance, can go to the list and select which instrument I would like to, which trader I would like to copy. And then I see that the trader that I'm copying He's trading cotton as an example, and this trader is if this trader is successful, I will also be successful. Whatever happens on this trader strategy, if I copy his strategy, I will get the same result. Keep in mind a couple of things. One is not for free. The app itself is for free, but to copy someone else is not. And this is something you can discover on the app very easily. The second thing is the app also allows us to custom the lot size to make more sense depending on the balance that we have versus the balance of the other traders we would like to copy. In other words, if we've got $10,000 on this demo account, but we would like to copy another trader that has 50, or that has just maybe another 20 or 30, right? Still, in terms of the risk money management, in terms of the margin requirement, we might not be able to fulfill the same margin requirement. This is why what AvaSocial allows us to do is it allows us to still copy the strategy, but we can choose a smaller lot size. So if I've got a smaller account, but I just want to, maybe I just want to test it out. I don't want to go to its full extent. I want to test it out first with a smaller lot size, and then if it's good or not, then I can choose if to increase it to its full extent. Maybe I could also make the same deposit as the other trader, and then I can get the same results, right? So this is another option that we've got. So we said we've got a software that runs by itself also automatically, and we can design and we can, adjust it the way that fits right. And we've got the other solution, which is linking our account to another account and simply choosing who's to trade. Now, regarding the if it's good or not is a long-term solution. Well, we can never know that because that depends on the success of the other trader. If it's good, we will have good results. If it's not good, we're not going to have good results. In terms of the long-term solution or short-term solution, if I will know how to trade and this trader is not doing well at some point, maybe by myself I can trade manually regardless, but this will not be under the copy trading, and this is why it's not relevant. So long-term, short-term, immediately, that depends solely on the person that you're copying, unless you have your own strategy and you're running your own strategy, so that doesn't depend at all. But long-term, short-term, permanently, that depends only on the success of the other trader, so we can never know that. I hope that it makes sense. Right, so we will paste the question here. Okay, so I'm gonna write down the answer here. Copy trading. Copy trading is solely depends on the success of the trader we are copying, long or short term. This is why we can never know, right? We cannot know if someone is gonna make profits in the future or have losses in the future. We can never know that. So we'll take that and paste it right here. Yeah, I don't think that's gonna work, unfortunately. With all the goodwill, I just don't think that we can. Not even sure where I am with this thing here. Maybe now. No. Oh God. That's not what we tried to do. But yeah, no. I think I just made more mess than I maybe like this. It makes a bit more sense. But this is the best that I can try. I think that I'll mess it up even more than what it looks like right now. So I think I'm just gonna leave it like this. Maybe like this. Okay, the third slide that we have here is just the information privileges and the links. So I'm going to share it with you on the chat. This is for additional education. There you go. This is for the FEC and the Help Center. For more official plan of questions, this is for real account, if you're still on the demo. And this is Last Lady Academy. But I'm also going to show you how to get there from the website. So this is very, very easy. We're going to click here on the thingy here to fold it down. And right from here, from this interface, without going anywhere, right here at the bottom above the chat, we've got this play icon. We can click here to go to the Academy. And then the first option, the tutorials, will open right here inside the website, a full tutorial with subtitles and with sound and with with high quality for us to enjoy right here. It just look how many topics we've got here. I mean, look, for everything, for the swap, for the order entries, everything here. And there is, like I said, a YouTube channel which has a lot of useful content there as well, just for you guys to enjoy. And the last thing I'm going to give you today will be the one-on-one premium market review, which you can use to get a one-on-one premium market review from your senior account manager. So we'll take the Q&A benefit. I'll send it on the chat. And yeah, unfortunately, guys, our time is up for today. So I wish you all best of luck with trading. Come join us next time. Have a wonderful week and have a good day.